There we go. Okay, now you guys can hear. I apologize for that. Oh, man. Okay, so let's start over again. And then maybe I'll just clip to this part of the segment. All right, anyways, so welcome to another Cracking Cryptocurrency Market Update, guys. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I'm also a professional proprietary trader. Sorry for my lack of posting videos for the last few weeks. The last week, both my daughter and I were sick, and actually just kind of the tail end of the week before that. So we did catch the coronavirus. It really wasn't bad. I'm not going to lie. I'm vaccinated. Obviously, my daughter is 4, so she's not vaccinated. But overall, it was, I was down for about 3 days. It felt pretty crummy. Felt pretty more crummy for the following 3 days after that. It was kind of hard to focus and concentrate. It was difficult to kind of get any work done. I'm lucky to have somebody in my life to help kind of take care of us, and all's well. So back to work, back to the markets, and cryptocurrency does not rest, does not sleep. So here we are with, you got red just like the Bitcoin can. Yeah, I bet. Yeah. Okay, so let's talk about the markets, guys. So we're here pushing forward, and we're going to break some things down. So there's a lot of interesting things going on in the cryptocurrency markets right now, particularly with Bitcoin and particularly with some other assets as well that I want to talk about. And I just want to let you guys know what I'm doing with my portfolio, how much dry powder I have laying around and kind of what I see moving forward. We're also going to talk about the overall macro environment of the markets. We're going to talk about obviously like the NASDAQ composite, the rate hikes, all this fear of hyperinflation and all these kind of things. And we'll kind of go over all that and particularly how we expect Bitcoin to respond in that scenario. So the first thing that I want to talk about, obviously, yesterday was an interesting day for cryptocurrency. We had Bitcoin really push up here. There was a good time here where this daily candle was just this really big greenie. And I got a lot of DMs and even some individuals talking about how their lower time frame or meso time frame systems were firing to go long. Using the daily time frame here, with both systems, this is the system that I showcased in yesterday's mentoring session using free indicators. And then, of course, these are using my proprietary indicators right here. Of course, the Wadatar explosion is free. Anybody can use that on TradingView, as well as our Ichimoku and Fisher transform indicator. But the Parallax time transformation, Minx, Quadriga, all those others, the baseline indicator, those are all proprietary and require premium subscription. So we had this nice big greenie, and meso time frame systems kind of were firing. What was nice is that our top bot right now, the super duper Dema strategy, did not fire long in that area. I think I just heard an eagle outside. I just heard it again. Yeah, there's something caught out there. And then, of course, today, just breaking that $40,000 support, crashing all the way down here to the current daily low, 37,683 on spot, a little bit lower actually on the derivatives exchanges, because as you guys can see here from the premium and funding index, we are in backwardation on the derivatives exchanges. So our futures contracts are trading a little bit lower than index price, and that's going to be part of the equation, but we'll get to that here in a second. There is a little bit more information there to kind of go over. Furthermore, let's see here. So yeah, breaking down below that support. Now, I had previously said in this range in not my last, but my second to last, and then my previous market update to the premium subscribers, when we talked about this area of the market, I also covered this in the mentoring session. That this was not an area to be going long from. This is the correct action was to be putting on shorts or maintaining shorts, right? Because we still remain below the baseline, and we had really gotten no signals to be out of our trade. Now, if one had taken, so we have got a couple. Let's just take a step back in time and see kind of how how Bitcoin has evolved since we reached this peak in November. And you guys can see as from my eyes as a trader, kind of what all the moves were. Okay, so let's just go back here to this peak in November and October. We're going to be looking at the Crypto Fear and Greed Index, which I find very helpful. It's actually, so I've yet to incorporate this really into my trading, but I've been analyzing this over the last year or so. And, I think it's going to find a place. Once I figure out a way to kind of automate this, I think it'll find a place into my permanent strategy. But something that's interesting here, let's go to where we reached the first market peak in October. And let's go over and see over here. what the crypto fear and greed index, when that peaked as well. So here we have the highest peak on October 21st, 2021. And if we go back over to the charts and look at where October 20th is and October 21st is, October 20th was the absolute high of the market before a correction here. And the 20th was the beginning of that, the 21st, excuse me, was the beginning of that correction right there. So interesting. We do have a period of consolidation, a little bit of a pullback, but we maintain the bullish baseline at that point in time. So we're still looking for pullback trades. Even though Parallax does go negative right here, and we do get the sell signal, so time transformation does give us that sell signal on the exit candle, we're still kind of looking for a continuation trade. That trade could come right here. You have bullish divergence on this candle. You wouldn't have seen it until this candle, but you have bullish divergence on this candle. And then you have a crossover on time transformation on our momentum oscillator above the baseline as well. So right there is kind of your entry, your signal to go long again, and allows you to capture this last half of the trend. Let's see if we get, where does time transformation give us our exit signal? It actually gives you one there, so there's a bit of profit. And then you could have got in again here and then out here for a decent profit too. So a couple decent trades. And really, here's the thing. If we look carefully at this area of the market, unless you've got a very good, unless you're just buying low, like let's say you're just selling, you're buying, let's say you're using something like RSI or some other momentum oscillator that gives you kind of this oversold area. Of course, we didn't reach oversold here, but essentially you'd be pairing your momentum oscillator with a reversal baseline bounce. You see price pull back, maintain the baseline, and then you see price start to push up. You get a crossover on your momentum oscillator, and there's kind of your signal to go long. Now, if you'd have just been trading time transformation crosses, you'd have been in here, out over here, on this candle, and then in again here and out again on this candle. All right. So you're not catching this full breadth of the move, but you catch half of it twice. All right. So that's basically the same thing. All right. But overall, rangy area of the market, tricky. The reversal baseline bounce, certainly there was the best entry. So we get the market breakdown. Okay. Let's go back over to the crypto fear and greed index. We reach another peak on November 8th and November 9th. If we go back over to the crypto fear and greed index and see again where the crypto fear and greed index peaked, we see that it was on November 9th. And we're, so these levels are important to note, at least for recent historicity. So the levels of around 80. Levels of around 80 on the crypto fear and greed index have tended to signal market reversals relatively well. And again, November 8th was the absolute peak of the market. We do actually wick higher on both November 9th, and then we wick the highest on November 10th. We actually reached the highest that Bitcoin's ever traded at 64,921. And then the market reverses. So we get full confirmation of that. So you could get, this could be, again, this could be a little tricky to trade in and of itself. It is helpful to look at in combination with your technical strategy so that you can get a little bit more pinpoint entry and exit. So here we see the market breakdown here. Parallax goes negative. We're using Parallax as a confirmation indicator here. Time transformation gives us the sell signal on the previous candle, using it as a centered oscillator. So we've got full confirmation on this candle. Wada Atar picks up over here. And so we actually have the volume and momentum for this trade. And so we're into shorts right here. So we're into beginning shorts on November 17th, 2021. Market doesn't do much, ends up dipping. It takes us about a week to get a nice big couple movements here. We have two big, huge profit-taking candles right here. And I think that's the move. So then the market continues to consolidate for a little bit. We do have a fake out. Likely profits are going to be taken in this area. We do have, let's see here. So here is, we see the market move here. And then here is where Parallax goes oversold, and we see it recover right here. So profits could have been taken there. So entry here and exit here for this part of the trend. And then likely we're just mostly sitting sideways. We do have the market push up. We do have a fake out right here in this area right here. I do want to kind of point out though, not on this system that I'm running right here. The system's a little bit smoother. And also, I find you guys can try this out if you want. Heikinashi can help as well. Remember, I know that a lot of people say that you can't backtest Heikinashi because the prices aren't accurate, but what are accurate are the lows and the highs. So you can easily backtest any strategy utilizing Heikinashi. And in fact, using Heikinashi on the lower time frames has been printing me quite a bit of money lately using the VWAP double bounce strategy. But Anyways, so, but even with Heikinashi, that did not save you from this fake out. So we do have a fake out here with a 26 Nachian, and then price does reverts back to the mean, and we do have another breakdown here. So we have Parallax flip negative again, time transformation does give the sell signal on this green candle. We have a little bit of drawdown, and then the market does move in our favor. Exit signal right here, and then time transformation. This is exactly why this was in conjunction with. So right here, I was telling people to maintain shorts, or that they could actually go ahead and put hedge shorts back on if they had closed them out here, because we do have this reversal baseline bounce, and then we get this crossover below zero on time transformation. So we have that entry, we have that continuation sell signal right here. Minx also signaled a continuation sell signal right here as well, and then we have this big nice movement to the downside, and that's where we're currently at. So the current market regime is still to the short side. We're still in a bearish cycle. I'm a little hesitant to call it a bear market, but we've been in pretty much a bear market since November. The market's done nothing but move down. What characterizes a bear market? A bear market's characterized by the market moving down. Let's see. I'm not for some reason, guys, I'm going to refresh this, but I'm having trouble seeing the chat, and I don't know why that is. So let me go over here to the live. Oh, I see why. Because for some reason, the stream that I scheduled is not the stream. So Restream, which we use. So I'm going to upload the proper thumbnail here. Sorry about that, guys. Restream, which is the multi-stream service that I use to stream to both DLive, Twitch, and YouTube, changed its UI this morning. So give me a second and let me get into the proper. There we go. Now that's saved. Now let me get into the actual correct chat. Okay. You guys love to see me fidget with the stream live, but there we go. And I still can't see the chat, so that's all right. We'll just carry on. Anyways, so current market regime is still to the short side. Shorts should be retained and held open. And now I want to talk about kind of where we're at with Bitcoin. Like, are we seeing a bottom? So if we take a look at a few things, so for example, skews on crypto options contracts, for example, and backwardation and premiums right now, and also options flows, really hinted at the fact that that the options market had not priced in which direction the risk lies, right? We see skews start to fall off. We see overall premiums stay flat. And what this tells us is that overall the options market is often helpful for looking. The options market is helpful to look at when we're looking at which direction is the market pricing in the most risk, right? We can usually glean, and it's not always correct, but we can often glean at least what the options market is telling us, which is the riskier side to be on. As we can see, or as I've seen over the past few weeks, there was no indication of which side the risk retained on, okay? So even from the options contracts that are being sold for cryptocurrency and for Bitcoin, the risk is priced in as multi-directional, right? Now, there's a lot of factors set up to give us a short squeeze, but we're not quite there yet, right? And all it kind of takes is looking at premium on the futures contracts, which futures contracts. What's interesting is that in traditional markets, options tend to be the most important thing to look at. In cryptocurrency, particularly with Bitcoin, well, actually, really with all the big cryptos, but particularly Bitcoin, it's the futures. Futures has the most volume of everything. So futures really does run. Futures really does run the market. There we go. I can see the chat now. All right. So now that I can see the chat, let me give a shout out for. All right. We've got SH Laxer. We've got Ernest of Gaia, Damian Hughes, Max Welch. Let's see here. We've got CMAC. We've got Kyle Mitchell, Aaron Webb. We've got Mr. Ether, Robert Warner as well. Good to see you guys in the chat. All right. So looking at futures can give us a good indication of whether the market is pricing in a local bottom. All right. So the way that we can do that is we can look at the BitMEX funding and premium index. This is still a good way to do it. It still tracks very well for me. You can also kind of pony up and get a Glassnode subscription to look at live premium and funding rates. But here's the thing. We can see that the market is in backwardation, i.e. contracts are trading at backwardation to spot price. So that is bearish in and of itself. However, the funding is really what's more important. The funding rate, so the premium, or backwardation in this case, lets you know how aggressive traders are being with market orders to the upside or the downside. So when there is a heavy premium on Bitcoin's price, meaning that the futures price is trading higher than the index price or the spot price, because the index price is a basket of spot prices, then it just means that market orders are being very aggressive to the upside. So the orders that are moving price are being more aggressive on the futures contracts. So i.e. generally, depends on the situation, but often that can just be the cost of doing business. However, when you want to look at where traders or where money is really positioned, you want to look at funding. Okay. Funding. So obviously in futures contracts, there's a long for every short. However, leverage is not the same. Okay. So just because there's one short for every long contract out there on Bybit or BitMEX or Binance or KuCoin or whatever, it doesn't mean that the longs are using more or less leverage. Whichever side is using more leverage to pony up that same number of contracts is the more at-risk side. Okay. So right now we can see that the market is still long, because funding is still positive. All right. And as long as the market is still net long, leverage wise, likely price is going to continue to go down. When funding does go negative, it tends to be a really good reversal indicator for Bitcoin. All right. So we can see multiple examples of that. So when funding goes negative, price usually moves up. That's usually a bottom. As long as funding remains positive and price remains in backwardation, all that means is that the market sentiment is bearish and the cost of doing business to the short side is the cost of doing business. However, shorts are still getting paid to hold open their positions. So that's something interesting as well. All right. So now I want to look at the crypto fear and greed index. So if we look at the crypto fear and greed index, we can see now it's important to kind of look historically here. So let me. There we go. Okay, so this is the crypto fear and greed index over time. And what's really important to kind of point out here is that we can see historically levels around 10 on the crypto fear and greed index indicate a market bottom. So we can see that in May of 2020, and here also moving into July of 2020, the crypto fear and greed index was regularly hitting bottoms of 10. So we hit 10 here, we hit 11 here, we hit 10 here, we hit 14 here, and then the actual low was 10. And if we go back in Bitcoin's price, we can see that that links up perfectly with this area of the market where we were reaching a market low. Now, where are we at right now with the crypto fear and greed index? So right now we have a level of 19. All right, we can scroll up and see what the fear and greed index is. Right now it is 19. We've been in extreme fear for 3 days now. Okay, but I don't think we're low enough. All right, so moving forward, since the cost of doing business on, all right, so let me, okay, so since the cost of doing business Since the cost of doing business on the futures exchanges is still rewarding longs, and although we are in backwardation, we have not flipped into negative funding. Coupled with the fact that the crypto fear and greed index is at 19 and has not yet dipped down to the lows of 10, leads me to believe that the market is going to continue to move down. Now, I don't think that we crash down. I know that we had a big move today, but I think we continue to grind lower. Now, just to make the fib guys happy out there, and I pointed this out previously, if we're looking for a decent downside target or next step, all right, we'll get this here in just a second. All right, and I mentioned this in the market update the other day. So price from the May lows, the June lows, May, June, July. So the summer lows to the recent market high. You can see here pretty much every significant fib level we have done some consolidation. So here at 382 we did some consolidating. Here at the 50% retracement we did some consolidating. Here at the 618, the golden pocket, we did some consolidating, and we've rejected from every one of those levels. So where's the next level of consolidation? The next significant fib level. It's at 786, so around 37,152. So we've got about $1,000 more to the downside. I think we're likely going to overshoot that a little bit and then do some consolidation right around that area. Now, likely that is going to push the crypto fear and greed index down. And if we continue to see shorts be aggressive, the best scenario that we could see there for the upside is that we do see funding finally go negative. We see funding finally go negative. If we see funding finally go negative, coupled with a really low rating on the crypto fear and greed index, historically that has been a local bottom, and probably not a bad idea if you guys have dry powder laying around to start entering some more longer term positions. All right. Now let's coach that and where I think the overall market is kind of fundamentally. There is a lot of, I think, false information and fear out there about like this imminent market crash that has to happen. Okay. The market has already corrected a significant amount. All right. And if you do so right now, if you listen to the news, they're telling you that since the Federal Reserve is going to raise interest rates to combat inflation, then the market is going to continue to sell off and price in that inflation. And therefore, the trades are to the downside or that investors are at risk. The reality, I think, is a little bit different. Okay. I think that we have made big strides globally in overcoming the coronavirus. And although the Omicron is kind of widespread right now and all that, we've got vaccinations, and overall people are just kind of over it. And we see that life has mostly, like, listen, not returned to normal, okay? But we're certainly on that path, all right? I think the release of the Omicron vaccine is going to be in March. So we've already had this absolute mobilization of our medical resources and our complete overhaul of how we deal with infectious diseases, which is something that we've really never done as a species. All right. So you can go back to all the pandemics and plagues that humanity has faced over the last since its existence. And we never really, like, you can see that we made, little progress, and we, medicine has improved dramatically with the introduction of the scientific method, but, and overall global cooperation. But really this coronavirus has really significantly improved our ability to triage and treat infectious diseases. And I think that it's going to have a significant impact on how we deal with diseases going forward. So, regardless of how that impacts the market, that's good for our species. All right. It's good for our species to be able to mobilize and heal ourselves, and also to take necessary measures to prevent the spread of infectious diseases. And it's also just kind of changed the mindset of individuals. And this has given a lot of people the opportunity to work from home. This has given a lot of people the opportunity to just change their perspectives on life and change their values, change what they do out of necessity. So I do like big shakeups in the world, because big shakeups tend to lead to progress, right? If you look at humanity over any period, right, you could see that we get better. If you look at the logarithmic curve of humanity's progress over time, you can see that it looks like the chart of Bitcoin. It just goes up. It falls back a little bit. Sometimes humanity's progress can correct, but overall we push forward and move on and life gets better. So I think that coupled with the fact that that the reality is that historically, when we have rate hikes, so when we go through rate hike periods, the market does not, so I'm talking about the traditional markets here, the market does not correct. All right. So If risk on stock assets are going to appreciate, so on average, the market returns like 13 to 20% when the Federal Reserve has done rate hikes. And the Federal Reserve is pretty ridiculous anyways, like the all-knowing, all-arbiter that they think they are, that the combator of inflation. If we look at like bond treasury, like if we look at yields and we look at the break-even price on bonds, we can see that the bond market isn't even pricing in further inflation moving forward. We've had no significant spikes in January, even after these announcements by Jerome Powell. The market has already corrected. So by the time the Fed institutes rate hikes, the market will have priced in rate hikes. That's the way it works. The global financial markets, and this includes cryptocurrency, is the most efficient vehicle for speculation that the world has ever known. Everything, and I mean everything, is priced in. It is priced in, and it's priced in advance, right? So that by the time something happens, the price has already responded to it. That's why we're seeing the corrections now, okay? So I think that when the rate hikes come, we're going to see the market resume trending upwards as it does, and I think cryptocurrency is likely to follow. Now, we do have this interesting fractal where the last time cryptocurrency went into a bear market, the traditional markets did continue to climb. So I did see a question earlier in the chat on whether I believe that traditional markets can continue, so stocks can continue to go up, and if crypto can continue to crash. And there certainly is a scenario where that exists, and crypto certainly is correcting harder and faster and earlier because it's a high risk on asset for the market. However, again, I think around the time the rate hikes are going to come in, we're going to see investors start to pick back up, and we're going to continue to see the markets move up. So either way, between here and now and there and then, I'm going to be here continuing to post the positions that I take, the trades that I make, giving you guys my analysis because I'm not going anywhere. I think that cryptocurrency is going to continue to do well. I think that we're going to continue to make new highs. All the innovation and beautiful things that came out over the last few years, alternatives to Ethereum, new decentralized finance applications, even things that are a little like, Ohm and MIM and all these kind of things. They're cool. And they're a lot better than what we currently have in the traditional finance world. So we're going to continue to see progress. This is, I'll continue to restate this. It's always a good time to get into the markets. It's always a good time to look into getting into some of these career paths in cryptocurrency, whether you want to become a developer or, again, like whether you want to become a marketer, right? That's a really good job in this space. So anyways, with that being said, all right, so we've looked at Bitcoin. Do I see a Bitcoin buy right now? I don't. Now, can we reverse from here? Is this a capitulation event? And we talked about this earlier. Like Bitcoin is likely to experience a capitulation. This is exactly what happens. As I was talking about through this area of the market, we saw skews go flat. So that means the options market is not pricing in risk one way or the other. And with Glassnode revealed some information that now 30% of Bitcoin positions are in loss. All right. Meaning only 70% of individuals who hold Bitcoin. And that has historically been a turning point for market cycles. And we've already corrected 42%, right? Actually more now. So let's measure from the peak. So we are currently down 45% from the market highs. All right. So a 50% correction would put us in line with what we experienced last time. So let's look at what we experienced last time from the market peaks. So the last time we crashed 55%. So just based on that metric, we could have another 10% more to correct. But as I said, I think we've got an interesting area about $1,000 below us, around the $37,000 mark. I think we're likely to stop there for a while and consolidate. And could we see price reverse following that? We could, because I think we're going to see a U bottom and not a V bottom moving out of this. So again, I don't think right now is the time to be unloading your dry powder yet. I mean, you can start dollar cost averaging here. That's absolutely fine if you've kind of got a wider plan. Just keep in mind that we can still correct to $37,000, $33,000, before price turns around. And listen, nobody knows how low price can go. The markets could correct 50 to 60%, but I think we're getting close to at least a local bottom the further the crypto fear and greed index goes down. And I'm really watching to see when futures contracts move into negative funding. We're already in backwardation, which is kind of the sign, right? Backwardation. So right now, backwardation just means that the cost of doing business is expensive for shorts to put on positions. That's all it means. But once that funding gets negative, it's typically a sign of the local bottom. So I don't see it now yet. Now, what would we need to see for price to be trending back up to the upside? Well, I think the Dawn chain is likely to move down here a little bit. I'm using the 26 period Dawn chain on this strategy as my baseline. And we do need price to be above the baseline before we're looking for trending longs. And right now that's sitting at around $43,000. So are there going to be some reversal and bounce opportunities? Are we kind of being set up for a short squeeze? Yes, absolutely. But we're not going to see that short squeeze until funding goes negative. We're not going to see that short squeeze until retail traders pile into shorts. And right now, they're really not. So, okay. Let's go take a look at Ethereum. Okay, so Ethereum essentially doing the exact same thing that Bitcoin's doing, just with more volatility, as we always see it done. So let's do a little bit of mumbo jumbo here. So we do kind of have this interesting level that we broke, all right? And also, you know, we could talk about these head and shoulders patterns all day long. So let's take the baseline off here for a little bit. All right, so we see, let's see here. You know, it's not, you know, guys know that I don't really like chart patterns, right? But they're kind of self-fulfilling. But anyways, I'll give you guys the absolute worst case scenario, and I don't think that this is going to happen. But if we take, let's see how we want to do this. If we take this as a shoulder, no, that's still not going to work. I would say probably the best way to draw this would be like this, in which case then we would measure the neckline like this. And we had that break here. Okay. All right. So mapping out this head and shoulders pattern right here. Here we go. So if we take this as the left shoulder, and if we take this as the head, right, and this as the right shoulder right here, okay? You guys see that they've drawn their neckline a little different from me. I like this neckline because I like to measure from the lows, and then we're going to measure from the head to the neckline at an angle, right? So directly from the top down to where the neckline, and then we'll measure down from the break, and that kind of gives us a price target. So let's map out that horizontal line right there, and then we can get rid of this tomfoolery. And now we can get rid of this trend line too. Okay. All right. So let's see what we've got here. Okay. All right. So logically, where would be the most likely support for Ethereum? Again, you know, it sucks to say down at around $1,800, but that's when our big high volume nodes really begin right here. So 70% of Ethereum volume since the 20th of December has been transacted in these levels. So this lets you know, this is kind of important, right? So the majority of volume transacted is within these levels. So this is good. This lets you know that the majority of holders of Ethereum are in profit. 70% of Ethereum holders are in profit. Additionally, Ethereum outflows from crypto exchanges this week were net negative, meaning that for the last couple of weeks, more Ethereum has been leaving exchanges than has been entering exchanges. Now, historically, this is bullish because if you're pulling your cryptocurrency off the exchange, then you're not selling it, right? You're pulling it off to hodl it, maybe interact with DeFi right now. But if you're moving your crypto onto an exchange, then you are likely going to be selling it. That is the point. You don't move your crypto onto the exchange to hodl it in cold storage, right? But again, we do have kind of this upper level of support. This is where, as we can see, this is where the top, it's interesting to note that I just measured that trend line before I looked at VPVR. And we can see here that it is tracking right now at the top of that 70% area. So once price breaches, and that level is at $2,500. So once Ethereum's price breaches $2,500, then we start to eat into that 70% of Ethereum holders that are in profit. All right. Now, a couple nice things is that usually when that happens, we kind of hope that bulls step in and defend their positions. But the most critical area I would say is going to be probably around that $1,800 to $1,700 level. That's where we have the most significant support. And I could see the first level of support coming up here around $2,500. So if Bitcoin does have another grind down to its 786, we could see Ethereum going down to $2,500 as well. And I think that that could put in a bit of a local bottom there as well. Again, I think the crypto fear and greed index is important. And overall, I'm pretty long-term bullish here. I'm always long-term bullish in cryptocurrency. Like once you get that into your head to be long-term bullish on crypto, you just make so much more money. Oh, sorry guys. I tilted my chair. Now I see you guys being blinded by the light behind me. Yeah, so once you kind of get into your head, the crypto is not going anywhere and that it's an appreciating asset, you tend to just make so much more money. All right, so Ethereum going to $2,500, I could absolutely see that. That would kind of be a capitulation event and clear of these lows. So that's the overall structure that I'm seeing for Ethereum. Now, let's actually look at the chart the way we normally look at the chart. And we'll go through, again, just as we did with Bitcoin, the plays, the trades, and kind of where we've been and where we've come. All right, so we'll just go back to the last few trades. Here we are again using the 26-period Dawn chain baseline. We see price following this pretty good correction right here, pop back up above on good volume. Now, Parallax, which is our confirmation indicator, does go positive right here. And we do have time transformation give the buy signal one candle previous, right? So price opens and closes above the baseline. We get the OK trade signal from the baseline algorithm as well. And we actually have the buy signal from Wadatar explosion here as well. So we've got a rising explosion level, letting us know the Bollinger Bands are separating, volatility is increasing in the market, and ideally, the market is going to be entering into a trend, or at least it's primed to enter into a trend, because when the Bollinger Bands contract, it indicates consolidation. When the Bollinger Bands expand, it indicates that volume and price is expanding and moving. And ideally, that is the beginning or the signal for a trend or continuation of a trend. And as trend following traders, that is what we're looking for. Now, we do get this this was kind of one of the most interesting kind of stair steps that I have seen an asset do in a while. And I posted about this, of course, to the premium members. We see price just stair step up here. But no. It's just interesting, right? Like this whole area of the market when Ethereum went from like 3,000 up to 4,600 was just really interesting. You know, it just channel traded just beautifully. This diagonal, this beautiful diagonal channel trade that you could have just traded, you know, up, down, left, and right, and sideways. It was really cool. Of course, as traders, we just bought when our indicators, when our trading strategy told us to enter, and we just held until we received until price closed on the other side of the baseline. So. But just a really cool and interesting area. And we can see that you can see that as it breaks. So this is kind of what's cool about, at least I often find with my style of trading, is that, you know, I don't use trend lines. I don't use any of that kind of stuff. I really don't even really use support and resistance unless I'm looking for like long-term buys. When I'm actively trading, I don't look at support and resistance because I find it's confusing. It kicks me out of trends way too early. But when I'm looking for areas to pick up large positions for the long term, then of course I do use support and resistance. I've actually got a education video on it for the premium members. But what we see here is that the baseline, which I use as an exit signal, is breached on the same candle that trend line is broken. So again, giving up some profits on that move, but overall still a good 25% on Ethereum holding throughout that area. And if you're taking profits on the way up to or using a trailing stop, you could have caught of about 40%. All right, so we enter into some chop, all right? Wadatar explosion keeps us out of long trades to this area and is telling us only to go short. We don't really get a good signal throughout here until, let's see here. Yeah, we don't get a good signal until right about here. Really good signal right here. So this is kind of letting us know to go short. As we can see, price just continues to consolidate for a little bit. Volatility dies down. So perhaps traders could have exited at this area right here in this consolidation. Totally fine. We actually do get kind of a movement to the up here, but we get no volume and Parallax stays negative. So we're not pulled into this rug right here. But then when price starts breaking down, we're able to get in on that bearish trend right around here and capture all of this movement right here. So again, as I still said, shorts should and still be maintained open. Now, anytime you see a nice big move, a nice big red candle, it's not a bad idea to take some profit. So if you're in your Ethereum short, 10, 20, maybe even 30%, you could pull off here at these levels. If you're not trailing your stop yet, not a bad time to start establishing a trailing stop loss. We can see the continuation signal right here. We had hidden bearish divergence right here as price comes up, rejects from the baseline, time transformation, our momentum oscillator crosses under right here, giving us a sell signal. We're still below the baseline, so right there is kind of a classic sell signal. And since we're still in an established trend, we don't need volume to pick up at that point. We can see Parallax is still negative as well. So what's interesting to see here, there's only two scenarios. I didn't point this out on Bitcoin earlier, but if we look at both time transformation and Parallax here, we can see that price is making a lower low. You guys know where I'm going with this. Price is making a lower low. But our oscillators are making currently higher lows. Now, we don't know their lows yet because we actually need to see a higher close to have a low. You can't, if the next candle closes lower than the current candle, then the current candle is not a low if the next candle goes lower. You need a candle to close higher than the current candle to say that the current candle is a low. But it's just interesting to point out that both on Bitcoin and on Ethereum, we are seeing potential bullish divergence, regular bullish divergence form. So I just wanted to point that out. We can see it here on Bitcoin as well. We can see price making a lower low. However, our momentum oscillator is both on time transformation and on Parallax making a higher low. All right. So if we start getting a couple things I would watch for, either a Heikin-Ashi trend flip. So if we go over to the Heikin-Ashi bars, either a Heikin-Ashi trend flip is a good indication to go long off that type of scenario. And what we would have there is not the trades we really like to take, but we could have a potential reversal trade back up to the baseline. 13% trade, 13.5% trade on Bitcoin. It's going to be a lot more on Ethereum. About a 20% potential trade on Ethereum. Now that's the high risk trade, not the one that I'm going to recommend. And again, there's no reason to take it yet because we don't see any kind of confirmation that we would want to see to take that trade. Otherwise, you're just buying on red and hoping the dip doesn't keep on dipping. And you guys know how well that tends to work. So, all right. So let's summarize that. Crypto fear and greed index is quite low. We are in extreme fear, but we haven't hit the levels where we typically see market reversals. Futures information from Bybit, Binance, KuCoin, BitMEX, that information, Kraken, that information remains negative. We do have high backwardation, which means that the price of our futures contracts are trading lower than the index price or the spot price. But that doesn't yet signal a sign of a reversal because funding is still positive. All right. So, meaning that longs are still paying shorts and the market is more leveraged to the long side still. All right. When funding switches to the negative, that indicates that shorts are now taking on the risk. Shorts are taking on leverage and longs are now chilling, sitting at low leverage. Right now, longs are highly leveraged. Shorts are not. Otherwise, funding would be negative. When we see funding switch to the negative, combined with a low crypto fear and greed score, combined with backwardation, price trading lower on the futures than it is on spot, those are typically good fundamental signs of market reversal. Okay. I also don't buy into the market crash fears. I think the market is going to continue to correct. But once we start seeing these rate hikes, I expect 2022 to be a good year for the markets. Okay. Now, it will be interesting to see whether or not I do believe that 2022 is going to be a good year for cryptocurrency markets. It will be interesting if it's not. But it's okay if it's not, because if you guys will recall, in 2017, we went from $1,000 of Bitcoin's price up to $20,000 in Bitcoin's price. And then over the next year and a half, crashed to $3,500. All right. Then we went up to $14,000 and we crashed back down to $4,500. Then we went to $60,000. Okay, so if this is a bad year for cryptocurrency, then we'll likely extend that bad year into about Q2, Q3 of 2023, and then we'll get a aftershock pump, likely up to about 30 to anywhere from, depending on how far Bitcoin goes down, 30 to 45,000, and then in moving into 2024. In 2025, we'll experience another massive bull run where we'll likely hit 100,000. We'll likely probably hit higher than that if we have that much time to consolidate. Also, there'll be great new projects, and it'll be an awesome 2 years for you guys to establish a trading strategy, for you guys to establish long-term positions. And if you missed out on this bull cycle, or if you profited off this bull cycle and you're waiting to roll your profits back in so that you can compound them and realize your dreams of financial freedom, you've got a great opportunity to do that. If you're low time frame preference, you're not going to do well in these markets. If you're high time frame preference, you're going to do well. But overall, right now, looking at everything that I'm seeing from development, from investors, I'm seeing 2022 being a good year for cryptocurrency and the markets in general, because rate hike years are generally good, regardless of what CNBC is trying to tell you. All right, so with that being said, okay, we're going to take a brief break, and we're going to not our sponsors, but we're just going to have a brief, ad from my favorite exchange. So if you guys are looking for an exchange to trade on, you certainly can. We'll be right back. And when we come back, we're going to be looking at altcoin requests, taking your chart requests. We'll talk a little about fundamentals, and then we're going to be closing the stream out with some well wishes. So don't go anywhere. We'll be right back. This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Give it back!
This is Jason 6 months later after signing up for Bybit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com. All right, and we're back, guys. All right, so let's go through the chat, and we're going to look at your altcoin requests. All right, so we'll also answer questions in this segment. So I see Mr. Clockwork. Welcome to the stream, by the way, my friend. He says, I think the crypto, so he asks, do you think the crypto could crash and stocks can pump? Now, I did cover that, but I think it's an unlikely scenario, but yes, it is possible. We've seen that in 2018. We saw that to a degree in 2019 as well, but the 2019 kind of correction was largely correlated with market correction as well. We are seeing the traditional markets correct and continue to correct right now. But again, I think that I think that what the markets are doing, in fact, I feel very strongly that what the markets are doing is the markets are already pricing in the fear of the rate hikes. Okay. And hedge funds are taking big shorts against the market, as they do. And once we actually get the rate hikes moving into March and April so the end of Q1 2022, we're going to start seeing the market move up. And I think crypto is likely to follow as well. Gravy Grits and Green says, do I think there will be a tradable bounce up towards the low 40s before testing 37 or not? Personally, I don't. I think that if we were going to see that bounce, it would have happened here. I think what we would have seen is we would have seen the market put in a higher low, and then we would have gotten that bounce up to 42, maybe 45. All right. Or excuse me, I'm looking at Ethereum. Let's go to Bitcoin here. Yeah, well, it's cool. I got the right numbers. I think we would have seen a higher low instead of a lower low here. And then I think we could have pushed up for a little short squeeze. And that's kind of what I've seen other market commentators kind of talking about nonstop, is that Bitcoin's prime for a short squeeze. We are, but that doesn't mean it's going to happen. In fact, so the market responded with more fear and the market crashed lower, indicating that we're not yet ready for that short squeeze. And when we look at funding, the fact that funding is not yet negative lets me know that the market's not yet ready. So I don't think that's going to happen before we actually hit these lows. Did I see that Peter Schiff, so Cybernetics says, did I see the Peter Schiff tweet that rate hikes will raise the price level or raise inflation? You know, the Fed has a really bad track record of combating inflation. The Fed also has a really bad track record of identifying inflation. So what's the conundrum, right? Back in, I think it was this 2005 or was it 2011? I think it was 2005. When Alan Greenspan went live and he talked about the fact that the Fed has raised rates, but yet the bond yields, the treasury yields, well, you know, we're continuing to not price in higher rates. So the bond markets right now are not pricing in a higher expected inflation. And again, the global financial markets are the most efficient kind of bullwhether for like what the hell is going on in the world. So I don't think that inflation is going to be that bad in 2022. And I don't think that the rate hikes are going to affect it. And we can see that the market has already priced it in. It's already priced in. The market's pricing it in right now as we speak. And so when I think when the rate hikes come, I think that the market is going to move up in general. And I think that inflation is going to continue to taper off. I will not be going for a year anytime soon, man. Andrew Munns, I decided to do something different today. I made money on corn, trading the commodities, huh? Interesting. Usually when I trade commodities, I typically have to use pretty high leverage. Thank you, Mr. Clockwork, 3638 watching, only 13 likes. Come on, long the likes. Yeah, I would appreciate that, guys. If you guys enjoyed the content, make sure to subscribe, hit the like button. Lets me know that I'm making good content, that you guys appreciate the work that goes into this. All right, so I do see a request for VeChain and ALGO. All right, so we'll look at VeChain on Binance. It looks like the Bitcoin chart, doesn't it? Okay, so a couple interesting things here on VeChain. So first off, we'll just look at trend status. All right, price is below the baseline. This is indicating that we are in a bearish trend. All right, our momentum oscillator, our confirmation indicator is bearish, letting us know that we should be looking for a bearish trend, and we can see that we've gotten that here and we've gotten that there. Our momentum oscillator is reaching the oversold territory, and we do have rising explosion. We do have a rising volatility level from Wadatar explosion. However, it is not, interestingly enough, it is not above the dead zone level. So that's pretty cool. So we don't actually have a trade here on VeChain right now. We could have taken this continuation trade on the 17th. So as we can see here, price rejects from the baseline. We're looking at our momentum oscillator for an entry signal. It crosses underneath the 0 line. And we look up at our confirmer and we see that it's bearish as well. So since this is a continuation trade, we don't need to look at volume. So we can enter here using our regular risk management system, and that would have been a really good trade. Now, looking kind of to the bull side. Now, overall, I think the markets are continuing to correct. I do have my dry powder ready, but I am not yet making big moves. We do have this interesting area of support that we are coming up to, as you guys can see right here. So the last times that VeChain came down here between 6 cents and 5 cents, that was the bottom. All right, we have this big market. This is the market crash in May, and we triple bottom there before pushing up, and we're now coming back down to that level. So as I said, this is going to correspond. I think we can trade to the lower end of this distribution range, where Bitcoin's going to likely hit that 786 fib. And Ethereum's going to hit that 786 fib as well. And I think we can see a market bounce at that point, because I think a couple more days, it could take a week to get down there. I don't think we crash all the way down here. I think we grind down there slowly, maybe over the next week. But really, I'm going to be watching funding to see funding flip negative. And I think all of that's going to correspond with like decent buy-in levels. So VeChain is kind of entering from support and resistance analysis, a buy zone right here between 6 cents and 5 cents. So if you've got some dry powder on the side, VeChain may not be a bad buy, looking just at where we're coming and looking at where we're going to trade into. Now, do you want to expend all of your dry powder? No. You know why? Because the market can dip lower. Listen, I don't think we crash. I think we grind lower. Okay. And I think we need to establish a baseline around that $37,000 area on Bitcoin and see how Bitcoin responds. Speaking of which, so let's quickly go over and look at Bitcoin dominance, right? That's weird. Okay. All right. So this is pretty interesting, right? So Bitcoin dominance, there's a couple of different ways to look at Bitcoin dominance. When Bitcoin dominance is dropping, it indicates that individuals are moving into riskier assets, and that Bitcoin's share of the market cap is decreasing. So we can see that from October all the way down here to January, Bitcoin dominance has decreased. All right. Now, you do need to look at USDT dominance as well. So we can see here that from November to that same period, USDT dominance has increased. So while there's a couple different ways. So what's interesting is that this is different. From July to September, okay, we saw Bitcoin dominance decrease. What did we see? And what's interesting here is that we see from July to September, we see USDT dominance decrease. So that's very interesting. What that means is that during this last time that Bitcoin dominance dropped, it was not individuals moving into stable coins. It was individuals moving into altcoins, right? Bitcoin dominance dropped, and so did USDT dominance, meaning the market was completely risk on. Now, on the other hand, we've seen Bitcoin dominance drop down to pretty historical lows, right? Triple bottom level on Bitcoin dominance. And we see Tether dominance absolutely skyrocket. Okay. So the market is scared. You can see whenever Tether dominance goes up, the market is very scared. Individuals are selling their assets, indicating not a bad buying opportunity long term. So again, I said this a couple times. If you've got dry powder, not a bad idea to start picking up longer term positions, but just be prepared in case we correct longer. So VeChain, as far as a trending trade, I don't see the long here. As far as a long-term hold, I could see beginning to stack up positions between 6 and 5 cents. All right, and then we got a request for ALGO. Okay. And, full disclaimer, because I always do this when we cover coins that I hold, I do hold ALGO. I hold ALGO for the long term. All right. All right, so we'll go over the same metrics, right? ALGO is beneath the 26-period dawn chain, indicating that we are in a bearish trend. Our confirmation indicator is bearish. Parallax is bearish. Oh, sorry. I should have pointed out on VeChain that we do have, I think I did maybe, the Parallax and time transformation were getting oversold. So kind of interesting. Looking at Algorand, we can see that Parallax is bearish and not oversold. Okay. Looking at time transformation, we can see that we are bearish. We actually had a nice continuation trade here, leading to this movement right here. And that are, however, that we're also oversold. All right. So I don't see a short entry right here. Okay. We are coming up upon the breakout from our previous level of consolidation. So you can see Algorand consolidated right here, formed this level of resistance. So we break down. This was the level of support, actually. So we have this level of support that we bounce off of, form a lower high, break down through that, and now this support acts as resistance here, here. Market finds a triple bottom, and then finds resistance at that level before pulling back, making a higher low, and then breaking out into this beautiful trend that we had right here. A lot of consolidation, scam wick to the upside, trend to the downside, trend up, and then now we're trending back down to the downside. So we are hitting that level of support, all right? I do like to see, like, I would feel more confident. I feel more confident about the level of support on VeChain because that was an area where price previously bottomed. This is an area where price previously stopped, all right? So support turn resistance doesn't always act the best. However, we do see this nice hammer candle forming on the Algorand daily time frame. All right. Now that's not enough in and of itself to make me buy. You can see hammer candles all the time and price can continue moving lower. What I would be watching for on Algorand is for a Heikinashi trend flip, or I would be looking for a buy signal from time transformation. So we want to see the fast line cross the slow line. And then what we could potentially do is take this back up to the baseline, about a 20% trade on the table for Algorand. From the previous, from the previous resistance turn support. Algorand has corrected. We're not going to use that scam wick. Algorand has corrected 55 to 58% from its previous market high. So probably not a bad opportunity. Again, I think that a lot of these cryptos look really good for long-term positioning right here. I just don't want everyone to expend all their dry powder at these absolute market lows until we have a pretty significant flip. Now we're getting there, right? I pointed out a lot of things. Crypto fear and greed index at a low level, all right? Futures price and backwardation, USTT dominance spiking and has been in an uptrend, all right? So the market is ripe for that to turn around, and we're getting close again to these rate hikes actually coming into fruition, and I think the market's starting to move up. So while I'm not confident that we're at the bottom yet, we're getting there. Sweet Canary asks, is it a good idea to swap Bitcoin for Ethereum or Litecoin at present? Is it a good idea to swap Bitcoin for Ethereum or Litecoin at present? Okay, so here's the reality. Bitcoin is the safe haven asset of the cryptocurrency markets, meaning that when it corrects less, and when it goes up less than the other risk on assets. So you would want to be darn sure that Ethereum is likely going to continue moving up before you swap your Bitcoin into Ethereum. If you're holding on to your crypto through the market decline, then the safest thing to hold it in is in Bitcoin, because Bitcoin is going to correct less percentage-wise than the riskier altcoins. It is less volatile. It's a high volatility asset, but it's less volatile. So I think that that is not the maneuver right now, unless you are dollar cost averaging into long-term positions, in which case I think it is not a bad idea to begin dollar cost averaging into long-term positions. I'm sorry. I don't want to laugh, man. I apologize. All right, guys, it is 12:09. So we are just going to do a quick recap of everything we've covered today. All right. So the crypto fear and greed index is at 19 out of 100. All right. Historically, levels of 10 to 14 have signaled market bottoms. Okay. Bitcoin dominance is extremely low. Okay. It's not able to break out of this downtrend yet, but it is at lows. Bitcoin dominance is at lows. So Bitcoin is primed for a reversal here, but I don't think we're quite there yet. Okay. if we look at whoops, that's not what I want. Sorry. If we look at futures funding, we can see that futures price is in backwardation, meaning that the price on futures exchanges is trading lower than the price on the spot exchanges. That is bullish, kind of. It's not bullish in and of itself, but it's bullish if we get a conjunction of negative funding. Funding is still positive. What that means is that long positions still are using more risk, i.e. more leverage, to hold those long positions open. When this flips from positive to negative, when funding flips, then we're likely going to see at that point the market actually turn around. So I think the market continues to grind lower over the next week or so. I don't think that we see a tradable bounce on Bitcoin to like 4,000 and the altcoins take a step. I could be wrong on that. I'm not always right, but I do know how to risk manage a portfolio. So I'm not there yet. I think that for investors on the sidelines who have stable coined up at market highs or somewhere around here, I think that it's not a bad time to begin dollar cost averaging in. I can still see larger corrections for the larger market, but you never know when the bottom's going to come. So it's a good idea to just buy when the buying is good. So I'm not recommending individuals throw all their dry powder or their stable coins on the side into these assets. I'm recommending that individuals begin mildly at these price levels. All right. I think altcoins are likely going to continue to move a little bit lower. They're going to follow along with Bitcoin and Ethereum. And we will see trend flips when Bitcoin is able to get back above 42, 43,000. I really would like to see negative funding and a lower crypto fear and greed index before we get there. All right. We also have a level of support coming in at 37,000. All right, guys. It has been a good Friday. I'm going to be posting some information, some more alpha to the premium members later on in my market update, as well as posting my closeout trades for the weekend. Now, having said all that I've said, being a little bearish, I will say this. The weekends tend to be overall bullish because institutional money isn't sloshing around in the cryptocurrency markets. So is there a trade moving forward over the next few days, a really small, slight one? Yes, I think possibly. I think the markets could drift up over Saturday and moving into Sunday evening, correct back down. That's what they tend to do. So with that being said, make sure that you guys manage your risk well. All right, so closing end of stream stuff. If you guys enjoy the content, make sure to subscribe to the channel and like the video. It incentivizes me to continue making the content. And you know, it also it's just a good feeling, guys. So if you like it, just click the button. I appreciate it. If you guys enjoy the analysis, if you guys would enjoy improving your trading skills, understanding some of the things that I see, if you guys would like to use the indicators, you guys can join our premium, you guys can join our premium group. It's available at premium.crackencryptocurrency.com. We do provide live buy and sell alerts for both our automated strategies, bottom feeder algorithm currently running, as well as the super duper DEMA strategy, trend following strategy, as well as manual signals posted by our team of analysts and traders as well. You also get access to our market updates. You get access to our proprietary indicator suite, which has about 10 exclusive indicators that were designed by me and my team that we use to analyze the market. Several of them you see on the screen right now. You also get access to our Pathways to Profit and Online Trading Academy, all of our courses on how to trade, everything from support and resistance to risk management to building a trend following strategy from the ground up so that you never have to really look for a signal alert again. That's kind of what we're all about. Otherwise, you guys can join us in the Discord, discord.crackencryptocurrency.com, and keep the conversation going after the live stream is over. We appreciate all the support. A big shout out to all the premium members. They make this possible. They allow me to continue doing this, and I hope to see you guys in the next one. Until Monday, guys, trade safely, and I will see you then. Cheers.